Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi guys, welcome back. It may be flat for the markets, but you know what? There are plenty of stocks that are buzzing around this morning. So let's take a look at some of them. VIP has hit a new high. It's up about 5% right now, and volumes are definitely picking up there. Some of these white goods players are looking pretty good. Voltas is up almost about 3.5% right now. Consumption stocks looking bright this morning. So future consumer, future lifestyle, all of them up and about. Crompton Consumer also in the green, up almost about 2.5%. And some stocks are bouncing back from the lows. Vakrangi is now up 10% and big volumes on Vakrangi this morning. Remember, it's still down about 80% this year, but this morning it's making an attempt to see a bit of a comeback. Otherwise, it's a very, very quiet day, but below the surface, there's plenty of activity.
I think a couple of interesting stocks, Sonia. One is Bajaj Finance. That one is making fresh intraday highs. I think that was Ashwini's 914 call as well. NIIT Tech is the other one where we've seen some gains. 1300 on that stock, and the stock that's been making, every time there's any kind of dip and it says buying. We pointed out that stock yesterday as well. Just pull out Havells' intraday chart. That one also has been in a bull market of its own ever since the numbers, and right now, if you take a look at, okay, it's once again slipped, but from lows there was that vertical rally that you had on Havells, so that's also an interesting stock to track right now.
Okay, all right, some stocks on the move over there. Right now, let's focus on some of the important earnings that we will watch out for today. From the pharma space, it'll be the turn of Lupin to report. Let's go across to Ekta to get a curtain raiser. Ekta.
Well, for Lupin this quarter, it is expected to probably be another subdued quarter for them. They have guided the market that FY19 is probably going to be more of a consolidatory type of year for Lupin, with no real big bang movement in any of the geographies. So for this quarter, we are expecting a single-digit growth. We are expecting margins to remain stable. With regards to geographies, US is probably going to be impacted on account of price pressure on some of their key products, such as Fortimet as well as Glumetza from the diabetes space. But just watch out for the ramp up in a couple of products such as Solosec, which they've launched. Separately, for India, it will obviously gain on a high base impact or a low base impact because of the GST normalization this quarter. So overall, India and US would be the most important. Commentary with regards to the warning letter on Goa and Pithampur would be top of mind.
Okay, so what about Cipla?
Well, for Cipla, we are expecting a better set of numbers. So double-digit growth is what we're expecting for Cipla. However, the key thing to watch out for would be any Q-on-Q improvement in the margins. Last quarter, the margins had actually disappointed, came in at 15% versus expectations of 19%. So any sort of bounce back to those levels would be most important. And separately, India should grow in double digits again because they have a strong India franchise plus GST-led normalization for the US markets. Key drugs such as Pumicort as well as Dacogen generic and Aloxi should probably benefit in terms of the portfolio. Price pressure and the impact would be keenly watched.
Okay, Ekta, thanks a lot for that. So that's a couple of large cap pharma stocks to watch out for. The VIP stock, though, is at record high despite entering SEBI's additional surveillance measures list. The stock has nearly tripled in the last 12 months and is up 5 times since April 2016. Dilip Piramal, chairman of VIP Industries, now joins us. Dilip, good morning. Your investors are rich. Will they get richer? I mean, the question I'm asking is the kind of growth that you've shown over the last 2 or 3 years, is that sustainable?
Oh, okay, I think we've just lost. I'll quickly recap the numbers because numbers in the first quarter have been absolute blowout. So just to go over, we'll try and patch that line again. There's revenue growth of nearly 30% and operationally it's been blowout for VIP. 67, 68% is the kind of EBITDA jump. Not just that, margins have also looked dramatically better. 14.3% has gone to 18.6% at the end of Q1 FY19. And gross margins are looking good. So we'll try and understand, get a breakup of this performance, how much is volume, how much is price, with Mr. Piramal in just a moment. But I think, Anuj, in the meantime, we can go back to the markets. Ashwini is back with us.
Yeah, I think the market's in the red now. Once again, 11,430 has been a bit of a resistance point. Ashwini, fair to say that's been rejected once again? 11,423 opening is high point? Or do you have a different take here? What's your trade?
See, today if you see, several heavyweights are higher, which means, again, Kotak, HDFC Bank are moving up, Bajaj Finance, Bajaj Finserv, Asian Paints, NIIT Tech, etc. They are moving up. So for the moment, you should be buying this dip. Keep a 20-point stop on the Nifty, maybe 50-odd points on the Bank Nifty. But this looks more like a trap where, people are stuck on the short side. And then second half, you start to see a reversal because so many of these large caps can't be moving higher if the market is basically planning to break down. So my sense is this is a good time to buy into it because, breakdowns happen with the first bar early morning and the market creams through levels. It does not, dithers like it is doing right now. So I would still buy this decline. And for the moment, because, we are trading boundaries, 11,440, 450 may not be very easy to cross. So you buy Bank of Baroda with a stop of 144, target of 156. NIIT Tech is a buy with a stop of 1280, target of 1310. Bajaj Finance is a buy with a stop of 2755, target of 2820. And I would also buy an HDFC because a bank which is coming through a deep correction and it's showing traction on the upside. Chances are it could even close at the high point of the day. So I'm more positive at these 11,380 sort of zones.
Stock that has played for a big recovery in the last 1 month is Voltas, and it's gaining some more ground right now. It's up almost about 4% and from the lows of 500 that it hit at the end of June, it's now back closer to the 600 marks. That's a 20% move that it's seen in less than a month. Ashwini, any thoughts on how to trade this one now?
See, this is basically, the day GST cuts were announced, the stock has started to move up. It's doing a range for a while between, say, 480 to about 650, 670. I think it's headed towards those levels.
Okay. By the way, lots of stocks on the move. VIP itself obviously is locked in upper circuit, 5% higher. Coffee Day Enterprises, 5% up. And watch out for some of the mid-cap tech plays because there's momentum building up on NIIT Tech. Also on Hexaware, also on Tata Elxsi. I think I saw that stock also closer to the day's highs. That as a pocket, mid-cap IT is doing really well this morning. Mitesh, your thoughts on the day so far and any ideas right now?
See, I think the day will remain possibly be like this. You might get a 30-odd point dip sometime during the day. That could be a good buying opportunity. But I think otherwise it'll be a market for the next few days which looks very tired and very subdued. And closer to about 11,450 or thereabouts, you will see supply and profit booking come in. But I have two buy calls. In fact, one buy and one sell. In fact, Voltas was on my list. It's moved up slightly since then, but around 590, it will be a good buy with a stop at 579 for targets of 610 to begin with. And BPCL, the intraday charts are breaking down, so that's a sell with a stop at 395 for targets of 376.
Fair enough. Titan's making high of the day. Ashwini, quick thoughts on this one?
See, Titan basically has made a bottom, say, around 850 and now is probably likely to make an excursion towards 980 to 1000. So this was looking good even yesterday and today it's showing continuation. As we speak, Reliance is making highs of the day. So slowly, the market is getting its legs back.
Okay. In fact, talking just one more chart check I wanted to take, Ashwini. Motherson Sumi, just pull out that stock intraday. All of a sudden, there's a big green bar on that one from the low point. Just look at that move on Motherson Sumi. Ashwini, take a look at the chart, bouncing back from yesterday's low.
See, this is that kind of stock, where if the stock has already corrected 25%, then you buy into any sort of results. It looks like it's made that bottom of 275, 280, and from here it's going to build on and possibly at some point give you 380, 400.
All right, well, a lot of stocks hitting new highs, but the one that tops the charts this morning is VIP. And let's resume our conversation with Dilip Piramal, the chairman of VIP Industries. Mr. Piramal, good morning. Stellar set of numbers this quarter, but can you start by telling us what the volume growth was in this quarter? What kind of price growth did you see? And what is a sustainable run rate in the quarters to come?
Well, all the sales increase has been volume growth because we did not take any significant price increase in April. And in fact, we are now thinking of taking a slight price. We took a slight price increase in July, about 3%. I feel that we will definitely be able to clock more than 20% growth in the coming quarters, because all the factors are fairly favorable. Our Indian economy is doing quite well. The travel business is doing very well, as is evidenced by the boom in aviation. And our own competitive strength within the industry is very strong. All our 4 brands, luggage brands, are doing extremely well, and it is for the first time that in any quarter we've advertised all 4 brands. We advertised our Aristocrat brand for the first time on television after, I think, about 30 years. So, and that's also shown very good traction. Our top-end brand, Carlton, we had a good consumer offer in terms of replacement of the bag for its entire lifetime without any questions asked, and even airline damage we have taken into account. And our workhorse brands, VIP and now Skybags, have also shown very good growth rate. Also, all our channels have been doing quite well. So all in all, this has been an outstanding quarter for us. And I hope that we will continue our progress.
So when you say 20% volume
handbags
growth...
brand Caprese also done quite well.
Sure. No, I just wanted to take that point forward about the 20% volume growth. Can you break that up for us? How is the volume growth expected to be for, say, Carlton, Skybags, your other brands as well?
Well, that is the best part, that in this last quarter, all our brands have grown quite well. Of course, it's not all, we grew by about 31%. Our sales grew by 31%. And it's not averaged out between the 4 brands. But by and large, I think the minimum was about 20% growth. And max was even 40%.
Mr. Piramal, sir, good morning.
It's been the volume growth has been good. Good morning.
Okay. I want to try and understand where this massive margin expansion has come from, whether you look at EBITDA margins or gross margins. Is this because the product mix suddenly was much better this time? Is it getting more skewed in favor of the higher margin brands? Is it because of commodity price? I mean, was there a deflationary impact at all? Where did the margins come from?
No, it's like this, that actually our topmost gross margins, like cost of goods sold, has gone up by 2%. But because the overall volume increase has been 30%, and overheads don't go up in the same proportion as the gross margins, so the margins have improved. Whenever sales are beyond 20%, sales growth is more than 20%, then the margins definitely tend to increase.
So you just told us that sales growth for the year should be 20% at least. Does that mean that this EBITDA margin level of around 18.5%, is that an expected run rate? Or maybe, I mean, can you even better margins from here then?
No, you see, what happens is that the first quarter is very strong. So the overall volumes are much higher. So the EBITDA is a bit higher in the first quarter. It comes down a little bit, but on the whole, the margins are good.
So, you know, the last time we spoke with you, Mr. Piramal, you said that you're targeting 500 crores in net profits in the next 5 years. But given the kind of run rate you've seen, do you think you could hit this target much earlier than expected?
Well, if things go this way, then definitely yes. I had said that, I had made a statement that the 5 years ending in March 18, we did an CAGR of PAT of 32%, which means in 4 years you grow in 5 years you grow 4 times. And I said that we'll continue, hope to do the same thing in the next 5 years. Obviously, the first quarter has been extremely good because our profit has gone up by 54. But first quarter is only 1 out of 20 quarters. So let us see how it pans out.
So just want to go back on the...
It's a good beginning.
So just wanted to go back on the margin question. You mentioned that margins will be good largely, but the first quarter momentum might not sustain. For the year as a whole, sir, what should be a margin band that we should watch out for? And if you could just tell us your targeted product mix as well, then for the year, between the high margin brands and the relatively lower margin ones.
Our product mix more or less remains the same because on Aristocrat brand, margins are a bit lower. And it's like that, the top end brands margins are the maximum. And Skybags VIP is more or less the same. But there's not too much of a difference, so I don't think that makes too much of a difference. Our product mix is very large, so it does average out. There might be few exceptions. And now we have Bangladesh also, which adds a little bit to our margins, not very much, maybe 1% or so.
So 18.5% margins?
So it's very complex.
For the year also?
No, I think it might be, might be a bit optimistic to say 18.5, but definitely 200 basis points lower would be more reasonable.
Okay, Mr. Piramal, all the best, and you have created a lot of wealth for shareholders in the past. We hope you continue to do that. VIP Industries at a record high today. They expect 20% volume growth in the quarters to come. Let's talk about the auto space now, particularly the commercial vehicle space. The government has revised the new axle load norms. In fact, there was one new amendment. The government has now come out with a notification saying that the maximum safe axle weight in single axle with 2 tires has been changed from 7.5 to 7 tons, and no fresh approvals will be needed from the ARAI for the increase in the gross vehicle weight. Vinod Dasari, the MD of Ashok Leyland, joins us now on the phone line to talk about that. Mr. Dasari, good morning. Since the last time we spoke, there have been a few clarifications that have come through. But in all, do you think that all the confusion has been cleared, or do you expect any more clarifications from the government?
Thank you, Sonia, and good morning. I think let me provide the clarity that I was trying to provide to the media as well as to the investors, because they were somehow spooked by this comment that was, or this new regulation that came. I hope by now everybody realizes that 60 to 65% of the vehicles don't even have any impact on us because they are volumetric. They like oil tankers or car carriers or white goods and so on. And for the balance, 30 to 40%, the assumption was that they were already overloaded anyway. So I don't see any impact. But nevertheless, assume that they were not overloaded and now they will overload to the new level, which was previously 25%, is now only 15%. So I expect the impact to be about 3 to 4% only. That's the first thing I wanted to clarify. Second is, it is still not clear whether existing vehicles are allowed. As far as we know, it is vehicles that have been produced but not sold which are allowed to have this norm, because vehicles that are in operation, there is no way for the OEMs or insurance companies to allow for a higher norm than previously regulated. OEMs have written to the ministry saying that existing vehicles that are already in operation, we will not be able to guarantee the safety on them because the customer might have modified them. So there is lack of clarity on vehicles that are in operation. Yesterday, the regulation that came showed clearly that the vehicles which are produced and yet not sold, that we are okay with, and it doesn't require ARI approval, so I'm happy with that. So that is a clarification that has come. Previously, people had sought 25% increase and the entire industry would fall. First of all, it is, again I repeat, it doesn't affect about 2/3 of the market, and even on the balance, it only affects by 15% in the worst case, which means a 3 to 4% impact for the full year. Okay. But nevertheless, I remain bullish for the full year, as we had talked earlier, Shoni.
Yes, in fact, that was what I was coming to. You had earlier guided for a 10% volume growth for FY19. Would you look to revise it higher, given that, one, this confusion is now out of the way, there's hardly any impact, and two, we have seen an improvement as far as freight demand is concerned?
Yes, I think just this confusion that was created dropped our share price substantially, and for all the associated companies, including banks, for some reason, because it was just a confusion. It doesn't mean 20 to 25% drop in the market. It actually translates only to about 3 or 4. But last 1 week or so, I've traveled extensively throughout the country, met all our dealers and all our frontline people, and I must say that the demand is very strong. Usually, 20% of the demand in our industry comes directly from infrastructure. Indirectly, maybe about 30%. Right now, it's about 40%, and we just can't meet that demand. I mean, just our company would have lost at least 1,000 vehicles a month because we weren't able to produce fast enough, even though we had forecasted a higher demand. So infrastructure is driving a huge demand. The second part of the demand is that because of GDP, now with the festive season coming in, and the government having reduced the GST rates on white goods. By the way, white goods, e-commerce, car carriers, cars and scooters all get transported only by trucks, and none of that get affected by axle load. So as such, I expect an increase in demand. In fact, I was revising the growth norms from about 10% that I had previously stated to you, Sonia, that I think we will grow at least by 15%.
Oh, that's just
for this.
That's a big headline, sir. That's you're saying sort of 10% growth this year.
I'm not shooting for a headline. I'm telling you what I heard in the market.
Okay. No.
I think if you want a headline, next year will be 30 to 40% growth, in my opinion.
Okay, so that's for the industry as a whole. Good to hear you sound as bullish as ever, sir. For Ashok Leyland, what might this translate into top-line headline revenue growth for FY19? Maybe some sort of a band that you can give us to work with?
I know you guys always try to pin me down to a number on revenue and a margin, but the revenue growth will be faster than the TIV growth by almost a factor of 1.5, because the number, it's no longer relevant just on the number of trucks, because the types of trucks we are making are bigger and bigger. And you will see 2 launches happening from us. The first one will be in end of this quarter, which will be the world's first 5-axle truck that can now carry, that can now lift 4 tires. It's never been done anywhere in the world before. So we are launching that. We had showcased that. So that will change the industry dynamics quite a bit and give us substantial revenues and hopefully market share also. And we are also launching a whole range of high horsepower tractors and tippers. This is required for the infrastructure demand, and this will continue for 4 or 5 years. I don't think this is like a short-term thing, pre-election thing that people had said. Nobody can build a road that fast. The number of contracts that I'm seeing is huge.
You know, your words are really moving the stock quite a bit. I mean, look at the intraday chart now, 1.5% higher on Ashok Leyland. So I just want to revisit what you said. The growth guidance for the industry from 10% earlier, you're saying it could be 15% in FY19. And you're saying a 30 to 40% growth is what you're expecting for the CV industry in FY20? Or is that over the next 2 years?
No, in FY20 alone. You look at, Sonia, in all the markets where they have gone to Euro 6, and look at the pre-buy. The pre-buy that happened for India for BS4, that means in the year before we got into BS4, is very small compared to the pre-buy I expect before BS6 comes. Remember, BS4 increased the cost by 4 to 5%. Whereas BS6 will increase the cost by 10 to 15%. As such, there will be a tremendous pre-buy. All the countries in the world have had 30 to 40% pre-buy before BS6. Now, what's happening, interestingly, as I met the customers across the country, they're saying that when it was the BS4 pre-buy, there was so much demand, you guys ran out of capacity and you increased prices. So I said, obviously, if the demand far surpasses supplies, we'll increase prices. So they said, why not buy it now? Because now we will be allowed to use the vehicle at least for 20 years. And I don't have to deal with the BS6 cost increase or the potential price increase of this pre-buy. So I think that is also going to add to our demand, but that's difficult to state how much. That's the icing on the cake.
So in order to service this new demand or this fresh incremental demand, especially that you're seeing from the infrastructure space, would you at any point look to increase capacity?
I think we are already doing that. In May, we had to take a shutdown of our plant because we doubled maybe 70% increase in our paint shop capacity. We've added quite a bit of capacity over the last 1 year in the higher models. A lot of work has been done with our supply chain. So I think capacity internally will not be a constraint. There will be some capacity constraints on certain models. We already face today of very large trucks where the supply chain is a constraint. So we're resolving all of those. Like I said earlier, if I had the supply chain capacity, I think I could have easily sold 4,000 more vehicles in the first quarter itself. We've resolved that in July, and you can see our July market share jump back up to 33% or 34%. I forgot exactly how much it was. But in the first quarter, if I had sold those 4,000 vehicles, I would have had my market share also. Because those are customers waiting for our vehicles. They paid for us, and since we were trying to serve that demand, we also lost out a bit on the export orders too.
Okay, so how far away are you from putting in fresh money on the ground? Because the sort of business outlook you're talking about is very, very heartening. I mean, for your shareholders, I think for the economy in general. So fresh CapEx,
we are continuously putting in CapEx. We are continuously putting in CapEx. I had previously said that we will have to put in somewhere in the neighborhood of 1,000 crores in the next couple of years, but half of that is for capability building. We are launching a whole new range of LCVs, completely new range of LCVs, which straddles the whole. Today, our LCV is only 2.5 ton, right? And we have one vehicle at 7.5 tons. So we'll have a full range. For the first time, our LCVs will be LHD also, so I can export, which is a much bigger market. So there's a huge upside for LCV. I mean, I think our LCV should be about 5 times where it is. So we are putting in for that. We are putting in for electric vehicles. We are putting capex for modular vehicles. We are putting capex for Euro 6. So about 60% of our total capex will probably go for capability building. 40% will go for debottlenecking and adding more capacity to our plants. I don't think we'll build a brand new plant, but I think we will certainly enhance capacity.
Okay, that's quite a bit of, an incremental upside that we're looking at. For the LCV segment, particularly, Mr. Dasari, this month has also been exceptional for you. I mean, your LCV sales have gone up almost 50%. Now you're sitting at 4,200 units per month. Do you think in the very near term, this kind of run rate is sustainable?
Absolutely. I think, we acquired the LCV shares from Nissan in October 17 and October 16, sorry, and we have turned around the company. It was loss-making. Now it is one of our most profitable business units. It's growing at a CAGR of about 25-30%, and this is by having only 1 or 2 models. What I expect by April 2020, when along with BS6 will come this new range of products called the Phoenix range, that's our code name project. It will be the new avatar of Dost, and entire range from 2 ton to almost 7.5 ton. We will not make sub 2 ton, but I assume the volumes will be substantially higher. And this will be for the first time. Today, I cannot sell a Dost in Middle East, for example. So that will give me an opportunity to increase that also. So I am assuming a substantial increase in LCV demand for Ashok Leyland, where we have continued to gain market share, even with just 1 model.
Okay,
Mr. Dasari, thank you so much for joining in.
And by the way, I just found out that we have won a order in Bangladesh for 300 double-deckers under Indian line of credit. So we are the only company in the world that makes double-deckers, Sonia, in case you're looking for a headline.
No, I think we've got enough and more of our headlines. I think the fact that you're revising the growth guidance higher speaks a lot about not just your own company, but about the industry as well. Thank you for joining us and giving us a lot of clarifications on the axle load norms as well as on the growth guidance for the industry. Those are some really strong statements coming in from Ashok Leyland.
The way that stock has moved is absolutely staggering, the intraday movement, just as we were having that conversation with Mr. Dasari.